Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, Emami numbers at the bottom of your screen, and the profits are much lower than expectations. Consolidated profits at about 26.5 crores compared to 1 crore same quarter last year. But I mean, Q1 of last year, as we know, for all companies, it was marked by GST. So compared to expectations, these are lower. 56 crores was the expectation, and profits have come in at about 26.5 odd crores or so. Revenues have come in at 615 crores. The poll was 638 crores, so there is a bit of a miss there as well. But that's, I mean, hardly anything, very small. But on the profit side, there seems to be more substantial miss.
That's because of higher taxes, Prashant. Taxation has shot up for this company. Now they're doing about 13 crores of tax in the bottom line. So that's the below EBITDA line issue. But the rest of the performance, Manglam?
Well, the top line is a bit of a miss as far as expectations are concerned. So, 614 crores compares with our poll of about 638 crores. We have to watch out for what the volume growth is. The EBITDA is a miss primarily on account of increased advertisement expenses. So if you take a look at the ad spends, they've come in higher by about 45% year on year. Of course, it was a low base in the previous quarter, but that said, ads as a percentage of sales as well. Emami usually does around 17-18%. At times goes to 20% as well, but this time it is 23.2%. So we need to know how much of this is in anticipation of future sales growth, or how much of this was to push the sales in this quarter itself. If it is to push the sales in this quarter, it has clearly not come. But if it is in anticipation for future sales growth, we have to watch out for management commentary in that. Volume growth is something I'll be looking at. As of now, looks like it's a bit of a miss on the top line. The EBITDA has come in at the cost of higher ad spends. Net profits, not really a big problem given Emami. They always have a huge amortization factor. So cash profit at 110 crores is in line with what the street was more or less working with. 126 odd crores if you must. So, the net profit has come in lower primarily because of the higher tax and higher ad spends because the EBITDA is lower. What we really need to know is what has propelled them to increase their ad spends and what is the volume growth. If they've increased their ad spends for this quarter itself, then the sales clearly is not coming in. What are they going forward with is something we'll watch out for.
So very interesting, Manglam, right? Because I mean, different companies and very different trends. Yesterday, Dabur came out all guns blazing. They're also spending much higher on advertising, but for them, it's bringing in more volumes. And the commentary from the management was so strong. Also, Emami is reacting quite sharply, despite the fact that this stock never ran up as much as its peers because of, I guess, some of these operational issues.
But, everything that could have gone right for Emami in this quarter was expected to go right. In that, you cannot afford to miss, irrespective of the valuations that you have, because the previous quarter was pedestrian, 18% decline in terms of volumes, 1 crore net profit, and the international business wasn't doing well as well. I'd like to see what exactly they've said in terms of international business too, but right now you had some recovery coming in from the Middle East, North African region. You had recovery on account of low base. You had the momentum going for you, competition from Patanjali coming off, and trade channels recovering. So all the positive triggers were in place for them. In that, if the revenue is a miss, then perhaps money shifts to other companies which are performing.
Absolutely, that's what seems to be happening. By the way, just for the record, Dabur is still holding on to a 2% up move from the morning after its 8% rise yesterday. Thanks, Manglam, for that analysis. Well, we've got our eye on some of these stocks that are moving around. By the way, the Nifty Bank has come off quite a bit. It's down about 0.5%, that index. Let's just pull up some of the constituents. Yeah, there's more selling on SBI, on ICICI Bank. So these are some of the moving parts for the market. HDFC Bank anyway, and HDFC, they are down even as we speak. So the Nifty Bank needs to be watched out. The Nifty is down about 11 points. Okay, but Manglam, before we let you go, there's another company that you track, Pidilite, that's going to be reporting numbers. What should we expect there?
Most likely the results will be after markets. So, those who are watching for the markets right now may take a breather. The stock may react tomorrow to numbers. We're expecting a good set there as well. The stock, of course, is very close to record high, not particularly cheap, trading at 43 times FY20 earnings. And first quarter seasonally strong for Pidilite ahead of monsoons. They will push their waterproof products, Dr. Fixit, there thereabouts going forward, and good offtake is expected on a low base. So revenue growth of around 18% is what the street is bracing itself with, led by domestic volume growth of 18 to 20%. Margins are likely to come in higher by about 20 basis points. That means an EBITDA growth of about 19% plus. Why is the margin likely to improve? It's not because of cost of goods sold. It's going to be because of the top line growth. So it'll be very interesting to see what the margin trend is going forward, what the company has to say in terms of input costs, and more importantly, what they have to say in terms of competition as well, because yesterday we got Astral Poly's numbers. Their adhesives business did fairly well. So demand outlook, input costs, and commentary on competition will be very important. 18 to 20% volume growth is something that the street is bracing itself with.
Well, I bought one tube of Fevikwik this quarter, so I've
that's
contributed to the top line.
0.00001% volume increase, courtesy Surabhi.
Mangalam, how much is this waterproofing business as a percentage of their overall business?
Would be around 15 to 20%, a little more as well, but the company does not,
break it down,
make it public. The analysts estimate anywhere between 15
it's not
to
very
20%.
small. It's meaningful.
It's meaningful right now, but the thing is, it's going to be much more meaningful going forward, given the sort of under-penetration that there is in this business and the sort of demand that there is. In fact, Mr. Bharatpuri himself had said that 8 out of 10 walls in India have a leakage problem, and only 2 out of those 8 do anything about it. So the remainder 6, there is a huge growth potential there. Yep.
Fevicol ka jod mazboot. What is it?
ये Fevicol का जोड़ है, टूटेगा नहीं.
Okay, thanks very much, Mangalam. So we'll watch out for Pidilite. I mean, it's an F&O stock as well, so heavily traded, lots of interest. Emami, by the way, 581, so it's down 1.75% still. We take okay, Ashwini is with us, being told, so let's go straight to him. Ashwini, thanks very much, appreciate your time. 7-8 points lower, this is, ahead of RBI policy, is this, because, yesterday's market showed us that there is generally more underlying strength. We saw a big recovery on the Nifty from the lows, 0.5%, 0.6% of the mid-cap and small-cap indices. So is this just before the RBI and then maybe the market gets back on track?
Well, if that was the case maybe half an hour ago, but you people have given me 2 news flows. One is, monsoon is deficient. The other one is, these trade wars are beginning to look ugly again. Plus, obviously, we know that there is liquidity tightening, central banks, etc. And we are not exactly sitting at lows or post a correction. If, all of this plays out, then possibly market will look for consolidation, and maybe Nifty can lose another 100 points from here. Bank Nifty can come off a bit. So that way, there is extra information in the last half an hour. My sense is that the narrow range on the Bank Nifty is broken down on the downside. And if this is the kind of news we'll receive and global markets are giving up their gains as well, then maybe RBI may not really matter, because a deficient rainfall is not priced in. Huge amounts of trade war is probably not priced in. RBI is probably the only event that is likely priced in. Plus, you are sitting in a very overextended market. So that way, RBI on its own may not have led to a lot of damage, but all of this extra things may. So having said that, just my disclosure of position is that I am now short on Bank Nifty. 10,340 is very crucial, because market is likely to accelerate below those levels. So these are about the levels from where we should turn if we have to. Individual stocks, Reliance Infra is a sell with a stop of 387, target of 365. Raymond is a sell with a stop of 814, target of 780. And Ashok Leyland is a buy with a stop of 112, target of 124.
Okay, by the way, we've got Mangalam back because the volume numbers for Emami are out, but Mangalam, they're still not helping the stock too much.
Yeah, because the volume numbers are not really, something to write home about. It's 16%. The street was working with a number of 15 to 18%. And remember, the base quarter had an 18% volume decline. So if you take a look at a 2-year CAGR, it would still be negative volume growth. And that compared to the others which have reported positive growth in terms of volumes, and they beat expectations, or perhaps, been at the higher end of the expected range. 16% is closer to the lower end of expected range. So 16% would imply that the 2-year volume CAGR would be negative for Emami. And
so it's raining FMCG news now that you're in the studios. And what's happening here? We have a big exit, I think, at Colgate. Let's just get back that flash back as well. But anyway, this company has had its own share of problems, at least in the quarter gone by, right?
Yep, we need to know the reason why he's resigning. Is it superannuation, or is it something to do with the parent or something? We definitely need to find out the reason. For Colgate, remember, the market share loss. They've been losing market share over the last 20 quarters. Yesterday as well, the management of Dabur said that 2 people are growing the toothpaste market right now. It's Dabur as well as Patanjali. The others aren't. So we definitely need to know
I'll read out what they've told the exchange is that he's informed the company of his decision to resign from the office of director and chairman of the board due to his taking a leave of absence from Colgate-Palmolive for personal reasons. He'll cease to be a director with effect the 1st of September 2018. And that's about it. There's no mention, obviously, of any immediate succession plan. But yeah, the big changes at Colgate happening. And that stock also now coming down to the days
I think
low.
a lot of the Indian operations are managed by Mr. Izam Bachelani. So I'm not sure what exactly would his role in Colgate currently would be. And because the reasons that you are mentioning, are not giving a lot of clarity with regards to the reason for his exit, is something that we will watch out for once the details are out.
Okay, so 11:31 on Colgate, and it's down about 1% or so. We take a very quick break here. We come back and we get you a quick wrap out of the July auto sales numbers. We've got a few already. We're waiting for a few others. Sonia joins in with all of that. We're back in 2.
The markets come off, and I can say for a fact that the last sort of 15 minutes of a decline, perhaps since we at least started the show, that news on the monsoon probably was not too well received, with at least SkyMet very clearly talking about a below average monsoon. 92% of the long period average is their estimate. Okay, let's just take a look at some of the movers and shakers. The banks are leading this move on the way down. So ICICI Bank and State Bank of India. There's weakness on L&T as well. Bharti Airtel, by the way, which ran up so hard last 2 days in a row, is undoing some of that momentum. There's a lot of selling suddenly on Bharti Airtel. Let's just pull up that stock for you as well. That's what we're talking about. It's just dipped into negative territory. But right now, let's keep the spotlight on the auto space, because it is the first of the month, which means numbers have been pouring in. We've got Sonia joining in to make sense of them for us. Sonia.
Well, thanks for that. It's a mixed bag so far. We've got 3 companies that have announced their numbers. Out of the lot, Maruti is the one that has disappointed the most. Some analysts believe it was on expected lines because growth rates were in any case expected to slow down on account of the high base effect from last year. Remember, same time last year, the numbers were very good because there was inventory restocking post the GST impact. So on account of that, growth rates have slowed down. However, despite that, these are lower than some street estimates, and that's why the stock is under pressure. That's because some of its key segments have been under pressure. The mini segment has fallen quite a bit. The Ciaz sales have plummeted to new lows, so they're hardly selling any Ciaz units right now compared to the 6,300 that they sold same time last year. It's just 60 units right now. And also the utility vehicle segment, the gypsies, etc., those have fallen quite a bit. It's only the compact car segment which is doing quite well because of the Ignis and the Baleno. That's about Maruti, so disappointment there. If you look at the two-wheeler side, Bajaj Auto has done pretty well actually this time. It's a 30% growth that they've seen in their overall sales. 4 lakh units is what they've clocked in this time. Domestic sales have been picking up month on month, and the management, Rajiv Bajaj, is quite confident that August will be better than July. In fact, he expects a 4.5 lakh unit run rate per month from the month of October, given the festive season. You have Ashok Leyland's numbers, which were also very good. Surprisingly, we haven't seen any impact of either the trucker strike or the axle load norms on this month's numbers. Maybe it may happen in the months to come, but in this month's numbers, there's no impact. It's a good, strong 27% growth that you're seeing as far as the volumes are concerned. And 2 months running now, Ashok Leyland has clocked in 15,000 units per month, which is a pretty impressive run rate. So mixed bag coming in for the sector.
Okay, Sonia, thank you very much for that. So that's a comprehensive wrap out of what we are watching out for. I just want to highlight a couple of stocks before we go any further. By the way, the market is down 11 odd points, which means from the high was 11,390. We're down exactly 45 points from the high on the Nifty. Okay, so just a couple of stocks before we go any further. Emami came out with numbers. Look at that go. It's down 6%, 6.5%. Yeah, I mean, that's a steep fall. We should probably put it up at the bottom of the screen. There's Tangamail Jewel, which is, by the way, owned by a couple of institutional investors that reported about 7.5%.
It's a PMS favorite stock for, I think, at least a couple of fund managers out there.
Yes. 7.5% growth in net profits. It's up 0.5%. You put up Raymond. It's down 5.5%, 792. That reported numbers, and we'll be speaking with the management in just a bit. And then you got the Reliance Infra, Reliance Capital, which are down. Both of them are down about 4.5% to 5% each. But essentially, the one stock that I began with is the one which is sold off the most, and that is Emami, which is, close to 7% lower now. And we had Mangalam just talk about that. Volume growth, etc., also looking a little weakish as compared to what was expected. And of course, as compared to what Dabur reported yesterday. But I think we've got the Raymond management now.
Yes, that's right. The company reported numbers yesterday. Revenues up 4%. The margin pretty much intact. Actually, minor margin improvement, 60% is what they have done. So let's get chatting with the management. We have Sanjay Bahl, Group CFO of Raymond, now joining us on the phone line. Sanjay, thanks so much for taking this all. It's been a decent set of numbers for you, a steady quarter. The branded textile business margin, however, has come down from 10% to about 7.5%. Can you just throw some light on these numbers and tell us what impacted the margin here?
So it's been a good start to the year, even though the consumer sentiment was a bit subdued in the first quarter, especially in the month of May, with the marriage seasons, also the days being very restricted in this quarter. Branded textile shows 2.5% drop. However, we have also given a footnote that 1% is really the cost reallocation, the central cost reallocation to the business segment. So effectively, on a like-for-like basis, it must read as 8.5%. So there's a differential of only 1.5%. And that 1.5% is really a portfolio mix between the domestic and the export businesses. The export businesses grew at a much faster pace in this quarter, so there is a little bit of a skewness which has happened on margins because of that. And yes, partially there has been an impact on the wool prices, which have gone up nearly 20%. But a large part of that wool cost increase has been absorbed by us due to operational efficiencies and due to blends that we have created. So we've absorbed a lot of the cost increase, and it's really due to a portfolio mix which has happened, which is for quarter one, and over the year we'll see the margins coming back on track.
So, Sanjay, if you could put some numbers to that, when you say margins will come back on track, then for this year, FY19, what's the margin band that you would expect? And if you could give us perhaps a revenue growth guidance number as well?
Outlook for the year, for the next 2 to 3 quarters, remains in line with the guidance. We've had a good start to the year, so our margins are up compared to previous year in quarter one. Quarter two, quarter three, and quarter four are normally the high-performing quarters for the company, given the seasonality factors in branded textile and apparel business. So we expect that we will certainly achieve the guidance given of double-digit growth in revenue and margin improvement of at least 100 basis points for the year.
In branded apparels, sir, the Park Avenue brand grew only about 2%. Could you talk about what happened there? What's your expectation?
Yeah, so Park Avenue has consistently grown over the last 12 quarters in double digits. So it has had an excellent growth momentum. Quarter one has been rather subdued, as I mentioned earlier. So we really shouldn't see branded apparel growth for a brand in isolation with respect to this quarter. Over the year, we are fairly confident with our offerings in Park Avenue, which is our flagship brand, full wardrobe solutions, and all the innovation that we are doing and excitement that is being created in Park Avenue will certainly help us to register strong growth. It will be in high single-digit growth that we anticipate for Park Avenue, given the high base that it has already created. So we are very positive on Park Avenue growth.
The tools and auto segments have turned around very well, and you mentioned earlier that once they do turn around, you'd actually look to sell that segment. What's the update?
We have been mentioning as part of our strategy, our first task is really to turn these businesses around. Auto business has performed exceedingly well last year, and the growth momentum continues with full capacity utilization, EBITDA margins at 24%, which are at a record level. So our effort is really to create that value in the business, and we will look at opportunities for value creation, certainly for unlocking value in the near future as the opportunities come. So we are completely open to that. Our tools and hardware business has also turned around now. The margins have improved. Turnover revenue growths have been established. Our export business in tools and hardware is bounced back. So overall, a good outlook for the engineering business. We are certainly going to look at opportunities as they come.
Okay. Sanjay, just to talk about the FMCg business, which is a more nascent, I think, a recent category for you. Where is it in terms of overall revenues? What are the plans with it? I mean, would you be looking at demerging it? And what's the kind of margins that you're operating on in that business as of now?
FMCg business is one of the growth engines, as we have said before.
Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Business for the group. A lot of investments are going into the business in terms of management teams which have now been created, also in terms of the innovation that is happening in this business. We have acquired a 50% stake in our JV with Ansell, and now we will integrate the FMCG business as one entity. So the business is cash positive. We have an EBITDA margin of around 5% right now, but really the outlook for us is to grow this business significantly, and we've just about started. So the growth outlook is certainly to scale this business up. We have powerful brands in our portfolio. We want to occupy the consumer mindset space in the men's grooming range of products. So the outlook is to exponentially grow this business over the next 3 to 4 years, and also scale up the margins also.
Okay, and finally, an update on the residential project which you are developing in Thane. That was, I think, announced in the 4th quarter, and there is a 4 crore charge which appears in the P&L as well. So is it related?
Yeah, so the board has approved the intent of the company, the plans that we had presented for our foray into residential real estate project. However, the approvals are still in process. We have secured quite a few approvals, but there are still a few approvals which are work in progress. And a lot of effort is going in to securitize that. And once we have the approvals is really when we will go and announce our launch plans, etc. So we will have to wait till we have got all the statutory approvals with us. We are in an advanced stage, however, in securing those approvals.
So it's a pleasure. Thank you very much for your time. Appreciate you joining in. When we started the conversation, there was about a 5.5% cut. There's some recovery. It's down about 4.4%. Well, taking stock of markets which are flat, 10 points lower, that's about it, but off the highs by quite a bit. But we'll have to take another quick break here. We come back, we speak with the management at DCM Shriram. They also reported earnings. Lots of segments to discuss. Mr. Ajay Shriram joining us on the other side. Okay, welcome back. The market's down from the highs by about 45 odd points or so. We've been discussing numbers with the management at Raymond. We've got DCM Shriram management now joining in to talk about their earnings. Ajay Shriram is chairman and senior managing director of the company, and he's with us here on the show. It's been a subdued kind of a quarter, no real fireworks. Mr. Shriram, good morning. Thank you for your time.
Thanks for inviting me.
Thank you, sir. Could you talk to us a little bit about what, the performance of the chloro-vinyl segment? What's the outlook on caustic soda prices? Where are they currently? I think in the fourth quarter, you had said that you were seeing some moderation.
That's true. So I think if we take the last quarter, the performance of our chlor-alkali business has been very stable. We, in fact, expanded our plant about 7-8 months ago by adding 500 tons per day capacity in Gujarat. And that is run at 100% capacity utilization. As you rightly said, the prices were, at a peak about 6-8 months back. But they've moderated somewhat because international prices have also moderated. But I would say, frankly, our chlor-alkali operations in terms of capacity, we are now 1,350 tons a day with both our plants combined. And it's a good, efficient operation which is doing well.
Okay. Sir, I just want to understand that for the chlorovinyl segment, this 22% growth that we've seen in the revenue, how much is that a function of volumes and how much is it pricing? I mean, overall, do you see pricing moving even higher from where we are?
Approximately 30% increase has been because of 13%, 13% has been because of volume increase and the balance is because of price.
And how are the prices?
And also I would, I think 13% includes our expansion plus the plant operation, which was running at full capacity for this quarter. So I think both of them contributed to this additional revenue.
Now, what about price trends on the chemical side of your business? What are you anticipating in the next couple of quarters, sir? Are these elevated price trends going to continue? If you could just break it down in terms of the different chemical segments.
Well, I'll put it this way. I think what happened is what peak we reached about 6 months back, it has moderated somewhat after that. But I think the good thing is the supply-demand picture which is evolving, and also with the consumption which is moving on a international level is moving fairly stable. So even though in this quarter our realization did go down by about 7% from the peak which we had, but I think the prices will maybe move down another 5-7%, but not too much, because the supply-demand position is quite good.
Right, Mr. Sriram, could you talk about the sugar segment? I mean, what was the volume growth? I mean, prices there have been weak, rather weak.
In sugar, in the last season, our sugarcane crush touched 611 lakh quintals of sugarcane, which was a jump of 46% compared to the previous season. And our sugar production was higher by 44% compared to the previous season. I think the entire sugar industry is under tremendous stress because the sugar prices have fallen quite a bit. The sugar cane price is high. And as we all know, the cane outstanding, latest I heard yesterday, was in the range of about 16,600 crores on an all-India basis, UP being the highest at about 12,000 plus crores. So I think there has to be some policy evolving to bring a balance between sugarcane price and sugar price. At the same time, frankly, let's be honest, I mean, take UP, SAP, State Advised Price, it should actually be SAPP, which is a State Advised Political Price. Now, if that is the decision of the government, then the difference between, let's say, the Rangarajan formula and the FRP price basis and the price declared by the state government should be borne by the state government. How can the industry bear this differential? And ultimately, at the end of the day, I think the farmer suffers.
So, Mr. Sriram, there were a couple of developments in the interim. I think Maharashtra imposed, slightly lower quota, the monthly sales quota. So, at least in Maharashtra, prices went up a little bit. I'm not so sure about UP. And also, are you into sugar exports at all? I mean, what's the kind of price trend that you are anticipating? Is there any light at the end of the tunnel? I mean, as we're looking at Q2, Q3. And of course, for sugar, we're getting into a brand new year in October.
I agree with you. I think two things I'll mention. One, what you're asking about exports. The government has come out with a quota for exports for all the sugar factories for the last season's production of sugar. And the agreement between the industry is that the factories which are at the port, we have an agreement with them and they export so that it saves on the freight and we compensate the costs. International price is running at about 21 rupees. Domestic price, after the government put a minimum of 29, is higher today at about 32 in UP and North India. So we actually settle the differential with the factory which exports on our behalf. At the same time, the government has also come out with a policy of reimbursing 5 rupees 50 paisa per quintal of sugarcane crushed in the last season for this exports. So once the export quota is complete, the government will reimburse us this amount. I think that's one. Second, what you were asking of the future, I think what we've started doing is now we look at the sugar business
Right.
in 3 products. One is sugar, the other is molasses, and the third is bagasse. So we have commissioned a distillery about 4 months ago of 150,000 liters a day.
Okay.
Manufacture ethanol, which we are supplying to oil companies.
So I'm going to really apologize. I'm coming in over there because unfortunately we've completely run out of time. But that's a very interesting topic. We do want to talk about your strategy for the future, and we'll keep that interview for another day. But thanks very much for a heads up. We'll take a break and we'll be right back.